Welcome everybody to the SNN.Network summer virtual event. I'm your host, Robert Kraft, and I'm really excited to bring to you our next panel. It's actually the Planet MicroCap Podcast panel. This is the podcast that I host. We publish on a weekly basis every Wednesday morning. You can find the podcast wherever you get podcasts on all streaming channels, as well as on YouTube. And today's theme that I really wanted to cover that I've spoke with each of the folks joining me individually about this topic. It's Gen Z. And really just all the trends and information and everything really surrounding this space. So joining me to do this is, and I'm going to go clockwise, we have Caitlin Cook, who is the head of community and VP of operations at Onramp Invest, as well as Onramp Academy, and the host of the brand new hit podcast, the Chicks of FinTwit podcast. Caitlin, thank you for joining us today.
Thank you for having me.
Great to have you. Also joining me is Michael Liu. He is an analyst at the Intelligent Fanatics Capital Management, and also one of the best Gen Z investors, or microcap investors, and investors in general out there, in my opinion. And so Michael, thank you for joining us today.
Thanks for having me, Bobby.
It's great to have you. And finally joining us on today's panel is Julia Carreon. She's a longtime financial services professional that actually has been specializing in speaking on, and an academic really, covering the Gen Z space, as well as Gen Z disruption technology, all of the above. So Julia, thank you so much for joining us today.
Thank you for having me.
I want to get started with asking kind of just in general what some of the trends that you're seeing are, and then maybe having a conversation whether or not like this, this is actually the case, or maybe it's starting to shift a little bit. So Julia, I want to throw to you first. What kind of trends are you seeing when it comes to Gen Z and the relationship with investing in finance and tech in general?
Yeah, so the most important thing I think that folks should consider when they think about Gen Z, and I see it as a mistake kind of writ large with researchers and companies, frankly, really not paying attention to the fact that Gen Z is the first cohort of human beings who were born with the smartphone. So people often put that on millennials, but in reality, Generation Z what is the first one to be born with a smartphone. As we know, it was invented only in 2007. And the reason I started blogging about them in 2017 is I really believe that researchers are not really comprehending the degree to which Gen Z will be disruptors in their own rights, because they have such powerful haptic memories, right? Haptic memory is your touch and feeling that you get when you're 3 years old, around 3 years old, and you have it until you die, right? So the fact that Generation Z has been playing on smartphones since they were very little, I think has set them up to be disruptors in ways that people are not expecting. And that's why I started blogging about it in 2017. And I think you and I, Bobby, have talked about the fact that what happened with GameStop and the Wall Street bets was kind of the first salvo of Gen Z making their voices heard in the marketplace in a way that nobody was really expecting. So in terms of trends, I think it's very difficult to predict kind of what things they will disrupt, but they will start disrupting the norm, because they have this unique mix of understanding social media in ways that we don't, right? I mean, Caitlin is a great example of somebody who has leveraged social media to benefit her career in ways that are extremely powerful. But even Caitlin is an older Gen Z relative to the other cohorts coming up behind them. And so think about a 15-year-old today who is the kind of ground zero for Gen Z. Think about what might they be thinking about and plotting in their bedroom that we haven't even thought of or anticipated. So I just think we are in for a really interesting ride over the next 10 years to kind of figure out where it is that they settle. But I do think that big banks and financial services should be paying attention to the fact that Gen Z isn't going to put up with kind of the status quo the way other generations have. So we'll just pause there.
No, that's a great place to start right there. So, I wanted, Michael, throwing it to you, what do you think when it comes to some of the trends and themes that Julia was saying? I mean, how old were you when you first got that phone and you started digging in and playing around? And how would you say that's affected you in some respects as an investor when you think about maybe new technology or anything having to do with that space?
Yeah, I mean, I think the social media and like the new technology part is really interesting. I mean, something I was thinking just when you were saying is um, it seems like there's a lot more young investors today that are, active on obviously Twitter and, some of the more private forums like Valley Investors Club and MicroCap Club. And it's changed a lot of the ways that they can get into the industry, like you were saying, like and have it help their careers. Before, I'm imagining you would apply to a job, do all the normal stuff, and internship stuff like that. But now you have a lot of people that are completely anonymous on Twitter and some of these forums, just sharing their ideas online, and then people catch on to that, and then you build connections that way, and it makes it much easier to do things, to build your personal brand, to get a job, of course, to do all that. So yeah, I mean, the technology aspect definitely changes the way that the industry has worked. And then the other thing is, with personal investing, I think one of the big themes that's emerging recently is a lot of, at least in the microcap space, a lot of people are starting to look more internationally, to Australia and the UK are easy ones because they speak English, but even some of the more esoteric markets, because before you could only trade really in the country that you have your brokerage account in, because there weren't these like fancy technologies. You didn't have interactive brokers or anything that could do anything in these foreign markets. So I think that's the other way, at least right now, that's coming to mind, that technology has sort of impacted the way that some younger investors, I think, invest. That's different than the older generations.
Right, 100%. Where people, younger investors or just investors in general, because of how the improvements with technology, you're starting to look more abroad, and looking at opportunities not just in your backyard, but in places that previously were just very, very difficult. But going back to another point that you said about how technology has enabled folks to look beyond what the traditional path was to finance. I mean, look no further than Caitlin Cook right here. I mean, being able to, I mean, she did have a traditional finance job, but has been able to leverage that to a much better, more incredible opportunity that I think that we would all agree over at Onramp. So, I mean, Caitlin, from your perspective, I mean, we talk about this a lot, both on the Chicks Into It podcast and also offline, about how technology has both been an incredible enabler for the next generation learning about investing, but at the same time, there's been some things that are like, I don't know about this. So, what do you think?
What do I think? Well, from a technology standpoint, kind of starting back with what Julia said, I mean, I got a phone, I think, in 6th or 7th grade, but there are younger Gen Zs that literally grew up with phones in their hands, as she said. And I think that what comes as second nature to Gen Zers and the younger generations has been so difficult for generations past from a technology standpoint. So the adoption of new technology, new ideas is definitely a lot faster for those younger generations. They're more open to change. They're more open to technology that makes their lives easier. Those that are used to sort of antiquated systems from the past are really more hesitant to adopt new things generally. From an investment standpoint, I think, especially on social media, you've noticed that a lot of younger people or younger generations generally have gotten interested in investing, and it's become a lot more social. So again, leveraging those newer social media platforms, but in relation to investing, I mean, it's become more of a community thing, right? So like the GameStop, the AMC, it's showing kind of the more willingness of these younger folks to put themselves out there, share their ideas, and social media and technology has given them the platform to do so. So I think it's been really interesting to see, one, the socialization of investing in these younger generations being so open to what used to be such a taboo topic. And then from adopting technology in general, it's just, I'm 23 and I'm amazed by the ease at which younger generations have been adopting new changes technologically versus older generations. So I'll stop there.
Hey, Bobby, can I
Yes.
can I just say something about that? Because
Sure.
I know that this subject that we really want to get into is investing, but I will just say that I have really strong feelings about the fact that human resources departments really should have, it's irresponsible for them not to have paid attention to this train coming as long ago as 7 to 10 years ago, right? You could have seen that this new generation wasn't just going to show up and expect seamless experiences. And if they didn't get it, they were going to find them and make their own communities for them, as Caitlin said. But also the fact that the hierarchy in financial services has for so long been all the senior executives up here rule the roost and all of us down here do what they say and we stay quiet about it. You could have seen that Gen Z wasn't going to tolerate that garbage and was going to push back. And so we are seeing kind of unprecedented friction as generations turn over, as baby boomers, exit the workforce and Gen X starts to have more power and I think is more open-minded about all of this. Just maybe I'm biased because I'm Gen X, but this is not for play anymore. Like really what's happening right now is kind of brass tacks friction that was expected with major generational turnover, which, as you know, is happening right now, right? From 5 years ago to the next 5 years, there was a 10-year period where things were going to get really interesting.
Absolutely. And I do want to come back to that because clearly, look, not everybody is going to be, their own self-starter, right? There are going to still be folks in Gen Z, millennials that are going to want to go maybe the traditional route or another route to get into finance in some respect, so that's a really important point. But I want to come back to that because I was going to come back to you on another thing because I think we can all agree, when it comes to when we think about Gen Z and the next generation of investors, the one sector that clearly dominates the headlines is tech, right? I mean, tech is the main thing, that seems to get the most buzz, the most eyeballs, other than AMC and GameStop. Full disclosure, not a shareholder, but that was for totally different reasons. But when we think about tech, Julia, I mean, and we talked about this a little bit when we did our individual interview, but what subcategories within tech seems to be gaining the most momentum that's really driven by Gen Z?
Well, so obviously I feel like definitely gaming, right? And the entertainment industry. And I think we're entering a interesting phase of hyper gamification of everything. And I think that, I am, as you know, really proud of having called that trend 5 years ago. But besides the gamification of everything, we are also, I think, obviously entering for financial services hyper personalization and or customization, where consumers expect that you know who they are and are modifying your experience or tailoring your experience to allow that to happen. So AI and gamification, I think, are the two frontiers that are going to be really interesting to watch.
Very cool. Caitlin, did you want to jump in? I think you sent me a message saying crypto and gamification. So now you got to jump in on that.
How did you just closed our DMs? That's a sin. But so working in the crypto space, kind of in fintech, it's very interesting, specifically on the gamification side of things, right? And I'm a huge, behavioral finance psychology person, and just the way in which gamification has an impact on like overall experience and feedback loops and how people interact with things. I think is the biggest trend from my limited experience, but it's just really interesting to see the tides turning and everything going that way. Even with like crypto movement, you see NFTs, you see digital horse racing, you see all kinds of things that are just kind of proving the point that gamification works, and that the more technology we see that embraces that instead of rejects it is probably better off in the long run for it.
For sure. And Caitlin, coming right back to you. I mean, look, we've talked about this online a little bit. And Michael, I'm going to ask you a very similar question. I know you tend, when you're looking at the stock market, you tend to be an investor that likes to quote unquote look at the boring stuff. So how do you balance that, probably getting asked question after question from your friends that may not pay attention so much to finance and are saying, hey, tell me about GameStop and AMC and all these other ones. And, sorry to any of you that are invested in that, but whatever. But how do you think about these trends and this hyper growth and hyper everything when you tend to kind of be like, I like some of the boring stuff.
Well, just to throw it out there, I am like over rationalize everything, right? So even though you see, I think that a lot of investors, especially the younger, hungrier, more likely to trade more often investors, kind of see that shiny object and go after it. And it's very appealing. It's sexy. That's what they think will get them that get rich quick. And I've never been a fan of that. I just don't see that as realistic. And I would much rather err on the side of caution, investing low cost, long term, for the next however many decades, hopefully a lot of them. But I also would say from a due diligence standpoint that it's super important to keep informed, regardless of what your timeline is investing, whatever your methodology. So I always keep an eye on it. I'm always reading about the markets. I'm always seeing, what's the new hottest thing, because that changes every single week these days, it seems, right? But it's important to pay attention to the trends, maybe not necessarily what happens that's like a hot flash for a few weeks and then goes away. I mean, you can't help but see those things when you use social media, but I pay more attention to what trends do I see appearing and where do I think that they'll go. Whether or not I act on them is a different thing, but I think it's just good to be cognizant of what everyone else is looking at as well, just to keep on top of it before it's too late.
100%. I couldn't agree more with everything you just said. Michael, what do you think? You've been looking at microcaps for years. I mean, when you talk about crazy trends, it seems like you hear the trend and it's like 100 new microcaps have just come up. Like I remember back in 2014 with cannabis, and now in the last couple of years, you got blockchain. And I mean, you had retail companies that now changed their name to have a blockchain name in them, So how do you block out the noise to really focus in on what is your core competency?
Yeah, so with microcaps, I think I've never had to think too much about like the big retail environment, just because, the level of interest that GameStop got would never happen in a microcap. Like most of these companies, I'll tell people, and there is a 0% chance that anybody's heard of them unless they're actually an investor that's actually done some work into the space, which is great from an investment standpoint. But yeah, unlike the bigger like trends, GameStop, like the big blockchain, the pump and dumps, Reddit, all that, like I see it as just kind of fun to follow. You can learn some interesting stuff. For example, how Robinhood sort of dealt with the settlements with their GameStop stock and sort of the political or regulatory response to that. That was pretty interesting. And it might happen again, I don't know. But for that, I just sort of follow it for fun. Kind of assuming that at some point the information might become relevant. But from an investment standpoint, it's very tough to trade. Although I'll tell a funny story is I had this friend in college who, probably everybody had friends in college who got into investing during COVID, and he would scour the Reddit message boards every day looking for the next hot stock or like whatever was being pumped or whatever. And then every single time he would tell me, and I would look at it and I'd go, dude, this company doesn't make any money. This company's losing $10 million a year, blah, blah, blah. This, like the CEO is a fraud, like all this stuff, right? All micros. But inevitably, every single one for a period of like 2 months, every single one that he pitched me would go up 50% the next week. Every single one. He just knew which ones were going to get pumped, or I don't know. They all got pumped, I guess. Something like that. So, you can actually make a bit of money there. If you spotted that trend, you knew where to look, you had that sort of feel of a Gen Z investor and what they would find appealing from, random message boards and stuff like that. So I don't know, there's probably opportunities in a lot of weird places, including all of these trends that pop up, like the blockchain, the time when, there were no more listed companies under $1, stuff like that.
Look, I mean, there's lots of ways you can make money in the markets, right? At the end of the day. Mm-hmm. So, I mean, you're right. Like, look, if you have that feel and you and it worked out for you. Great. I think the thing that that especially, as you know, on my podcast, and we always try and put out there, we like to push out, we like to talk about the things that we know, from a general perspective is more or less will work. But also, especially in microcaps, if you do the work, will work. You'll definitely pay the piper maybe once or twice, but that's part of it.
Yeah, just to be clear,
Yeah.
since that like 1 to 2 month period, now everything that he tells me about is down 90%. So that would not have worked as a strategy. And I wouldn't recommend ever like getting your ideas off of Reddit or anything like that. But it was just funny how like the market just, went totally bonkers for, a couple of weeks basically during COVID.
It's still going, man. It's not just on Reddit. Now, Caitlin, we were just talking about this the other day, like FinTwit, FinTwit obviously, but I call it now FinTalk, or it's the financial TikTok. I can't take credit. I think Kyla said that one. So, but FinTalk, FinTube. All right, I'll take credit for that one. But yeah, it's everywhere. I don't know, Julia. From what you've seen, do you think this is something that? Is there going to be any kind of regulation or something, or there a technology solution? I know that's an overarching question. I apologize, but we're just kind of spitballing here. Like something has to give. Like it's intense.
Well, look, I think there's no question that regulators have to catch up with what's happening, and I frankly think with what happened with Robinhood in those heady days a few months ago, it was clear that the regulators, I think, were taken by surprise a little bit. And so what I would be making sure young investors knew is to be careful, right? And to do your research, which Caitlin and Michael have just said. I'm going to share a story from my own experience. I grew up in the dot-com boom. I make no qualms about the fact that I'm 50. I grew up in the dot-com boom in the early 2000s. A lot of people don't realize that a company that was doing 401ks was actually on the grift. And my startup had put all of our 401ks at this young company. I rolled over my 401k. I was in my mid to late 20s, and they made off with it. And they ended up getting sued by the San Francisco Attorney General, and peanuts on the dollar ended up getting recovered. But I took that account from Fidelity and rolled it over into a fraudulent account, literally having no idea what I was doing, right? My employer said, roll over your 401k. And I did, and I had no idea what I was doing because I knew nothing about financial services. I was in tech and had started my career as a journalist. So I got burned. It was $30,000 in real money 25 years ago. So that's a really sad story. And it's because I had no idea. So I really hope that anybody listening here is paying attention to the fact that there are lots of people, even legitimate people that are well-meaning, that can blow you up with your finances. And so do the research and do the work, because it's not worth it in the end to lose everything. Please, everybody listen to Julia and everything that she just said. And of course, and also Michael and Caleb, do the research. Even if you don't, make that mistake or make that investment, you're learning something. And so just, yes, Julia, again, 100% agree with everything that you just said. And going on that same point, Caitlin, we were just, you just did interviews with Reece Sharma, with Kyla Scanlon, talking about how, there's a lot of these new quote, personalities out there on FinTalk and FinTwit, for those who are watching this that might be getting their ideas from some of these folks out there, what are some things that they can do to, look out for, or, maybe some stay away, just some things that can help them when, they want to be entertained, but also maybe not necessarily listen to what they are trying to tell them to do.
Sure. And even those who don't explicitly get their investment ideas from, you know, financial TikTok or Twitter or Instagram, there's still that information, that nugget of information in your brain when you're making decisions after the fact. So you just need to always be cognizant of the information you're absorbing. But that being said, I think always do your own due diligence. It seems so simple, but I think that we're very easily swayed by people that have larger platforms, and they may not necessarily have, I don't want to say the credentials, right? Because finance, and the nice part about finance and investing is that you don't necessarily need to go get your PhD in it to learn about it, right? It's active. You can put your money in and it'll show for yourself and you learn along the way. But it's just always comes back to doing your own research. If you don't have conviction yourself behind an investment idea, don't put your money into it, right? Or not expect to lose it, but you have to factor in the fact that there may be risks that you didn't take the time to look into if you're taking someone else's word. And that's just a little bit irresponsible in my opinion, but other people may have the risk tolerance to do that depending on, the amount. But I personally don't prescribe to that. I would not recommend it. I would say if you're not sure, always do more research. It's good to have your facts straight. It's good to have an educated opinion on things rather than just a knee-jerk reaction to what you're seeing based on what's on social media, because it's very easy to do. And I think we've all fallen prey to that at some point, whether that's investment related or not. But just, I think a lot of it's, self-awareness and taking the time to research on your own.
Agreed. Michael, what's your thoughts on this?
Yeah, just to add to that, I mean, I would just be wary of somebody that wants you to buy their stock or to do what they say, because they shouldn't have any incentive to do that. I mean, people that post the stock on Twitter specifically to pump it are not, doing it properly, I guess I would say. The best companies you can see, the best microcaps out there are very at least the ones that I like are very information averse. They don't like sharing too much with investors, getting expectations too high, giving guidance, right? Doing any of that, or some even don't do earnings calls. And those are usually the best ones because they don't need to raise money. They know the business is good. Their perspective is, if you want to buy our stock because you believe in us, that's great. If not, we don't care. We're not going to try to convince you. And the people on Twitter should be the same. If somebody really, really wants you to get you to buy a stock, you should really be asking them why, because you buying the stock shouldn't affect anything, of the business fundamentals, right? It's only going to affect the stock price maybe. And then, if all they care about is the stock going up, then, it's probably a pump and dump or something similar to that. So yeah, I would just be wary if somebody's really trying to shove something down your throat and get you to do anything in life, and in this case, specifically to buy a stock. It usually means there's something worse hidden. Obviously, they're only going to tell you the best information. They're going to omit the bad information, and they're not governed by FCC regulations or anything to divulge, some of the negative information like companies are. They can literally cherry pick whatever they want and put it publicly.
Yeah, that's when we dig into the SEC filings, right? That's a topic for a whole another day, right? We'll bring Maj on and do a whole thing on information arbitrage. But another question that I had, along this topic, and Julie, I'm going to come back to you. Based on some of the trends or some of the research you've done, and even from your experience when you saw back in the .com days, most of this Gen Z investors, they haven't seen a bear market. Right. I mean, maybe they started investing a little bit before March 2020, but I'd say for the most part, from some of the stats that I've seen, most of the new accounts opened after March 20th, and it's only been an uphill climb since then. So is there fear of losing some of these investors as a result of when this bear market comes, or how do you think about what could happen as a result? I mean, you went through the .com bubble. I mean, are you seeing a lot of potentially the same things happening here?
Well, so that's a really fun loaded question for me, because I believe that cycles are inevitable, and this one has been longer and kind of cropped up for lots of different fascinating reasons, not least of which is a 100-year pandemic, which, think about this, my stepdad died in 2018. He was 75 and he never lived through a 100-year pandemic. So think about what now Gen Z has gone through, living through a pandemic, in addition to living through the Great Recession, in addition to being born during the War on Terror. So like the psychological impacts of all of this are going to have very long tails and is going to be very interesting to watch in the long term. But about your specific question, look, Bobby, there will be a down market at some point, right? And being prepared to manage through that risk is something you do before it happens, right? And if you're not preparing for it now, you are going to be burned by it when it does happen. And so I do think that there is a lot to be said about, if something sounds too good to be true, it probably is. And that's a really good, in my opinion, stress test of, does something sound like it's too crazy? I mean, Michael, I mean, that's how I would paraphrase what Michael said. You have to be managing your risk all the time. You have to be doing your due diligence. And I think the good news with Gen Z is they've been raised with enough stressful world events, right, that are kind of seared in their head. Sociologists would tell you that it's very much shaping who they are and how they show up in the workforce. They've been through enough bad things that I think they are capable of wrapping their minds around the fact that there will be another bear market at some point.
That's fascinating. I honestly hadn't really even thought about that from a psychological perspective of like, damn, Gen Z actually has been through a whole heck of a lot. I mean, wow, sorry, I'm having a.
And I didn't even
see
mention
my face go.
Yeah, well, and I didn't even mention one of the biggest ones that has shaped them is actually Columbine. The whole notion of school shootings and that occurring and what that has done, and the school shooting drills and not blinking an eye when someone shows up to school with a gun. Like, this is all very much part of who they are. And I just think, oh my God, living through a pandemic is just one more shot across the bow at these kids. I think, and I'm talking about the young ones, I don't mean to call the ones that are adults kids, but the psychological impacts I think are going to have very long tails. And I think it's too soon to tell what COVID will have done to all of that.
Right. Yeah, no, I mean, Caitlin, now I'm coming to you on this because, a lot of what Julia is saying has a lot to do with behavioral finance, and whether or not, we can be, is human behavior just going to continue to be very cyclical, right? A bear market is another bear market. People are going to have their reactions, or could this next one be maybe a little different in terms of the reaction to it because of all this new, these new investors in the market, especially on the Gen Z side, because they've been through so much. Who knows? It might not be as bad. It might be a lot more resilient than maybe some people would expect. I mean, I'm not asking you to have a crystal ball. Don't worry, you don't. But your thoughts on it.
I mean, I'd be interested to see at some point down the road when that happens, right? Just because if you think about some of the newer investors, the younger investors that have entered during this insane past year, the volatility has been the only normal part of all of this, right? Like, it's just been consistently turbulent, consistently every single turn, there's been something crazy happening in the news, NFTs going for hundreds of thousands of dollars. Like, there's just so much going on. It's so chaotic that's almost become the constant at this point. And I think that will be a positive thing for investors, especially the younger ones that are starting out in this. Kind of zooming out, I just remember starting my career a couple of years ago, and when COVID hit, I was in sales for an asset manager, and things were selling anything at that time when everyone was so emotional and things were going haywire was incredibly difficult. And I remember one of my mentors told me, this will be one of the best things for you professionally, because if you start out in a state of chaos and are able to navigate that, everything else after that is just so much easier. So I think that those who went into the markets and had it be smooth sailing and such a long bull run at the beginning, that's formative, right? Those are the formative years at the beginning when you're starting something, psychologically speaking. And if you were an investor in the past even 6 months, you were in for a wild ride. And I think that shapes a lot, especially around, risk management and, just kind of decision making as a whole from an investment standpoint. So I don't have a crystal ball, but I'm very curious to see. And I think that in the long run, for the investors that at least stick it out, even if there does end up being sort of a bear market at some point in the future, which there will be, it's cyclical, but if they stick around, I think they'll be a lot better for it from the experiences they had early on.
Absolutely, 100%. So, and Michael, kind of a similar question to you. I mean, look, in microcaps, we hear a lot of our colleagues, and I'm sure you would agree, is, you're trying to find businesses that are, bear market averse, or, can survive in times of, we think back to 08, 09 like times, So, I mean, how do you think about this? As we all said here, we know a bear market is going to come at some point, whether it's next year, next month, 2 years, 3 years, who knows? So, I mean, how do you think about it? And especially when you think about some of the valuations as well for some of these micros out there.
Yeah, I mean, I think so purely from an investment perspective, not Gen Z focused, you're asking?
Both, if you like.
Yeah, I mean, I think like right now, this is kind of tied to the Gen Z thing. I don't know what's causing it, but valuations across the board have risen significantly for a lot of microcaps. And you can see, and it, a lot of it has to do with some people on Twitter, potentially Gen Z investors picking up on certain things. I mean, Gen Z investors love low price. I'll say the investors that came on board during COVID love very low price stocks, and those tend to be smaller microcaps. So there is a lot more liquidity and a lot higher valuations in microcaps right now. In terms of businesses, I mean, during COVID, at least, not a lot of microcap businesses got killed, but valuations got taken down significantly. And I think probably one of the biggest risks of a bear market right now is that, you get that dual impact of a fundamental hit and the multiple compression too, from, where it is now, which is kind of artificially driven a little bit, I think. So yeah, I would just, again, be wary of buying into more hyped, smaller companies for sure.
All right. Well, my last question for everybody here is, I want to hear your best overreaction. Like, if you had to really just go outside the box, this would be the weirdest potential thing that maybe, if you can make a loose argument, could happen. What's your best overreaction as to what you think the next Gen Z type trend might be? So who wants to go first with that one? Should we take a breather? Should we take a quick breath and then figure out who should go first with that? All right, I'm picking Julia. You go first.
I'm gobsmacked by that question, and I happen to get it a lot because I predicted the gaming hyper gamification kind of before anybody else on the street. So I'm going to say that I can't predict kind of where you might see disruption and what might be completely unpredictable. I'm going to go with the Gen X safe answer and just tell you that if you have audience members that are listening who are actually those people in charge of a lot of things, you need to get some Gen Z perspective and act on it now. Like, the time to think about it and ponder and stay relevant because based on your own ideas, that is past and out the window, right? Like, you need to be listening to what the teenagers in your life have to say and really paying attention, because because they are going to find ways to make sure that what they are thinking about right now comes to fruition. So that's my best advice. And I apologize, I dodged your question completely, Bobby. You can hold it against me.
Don't worry, I'm going to come back to you because I'm going to ask Caitlin and Michael the same thing. So give you a little more time to think about it. But that was great advice. I couldn't agree more. Everybody should be thinking more about what Gen Z is thinking about and, deciding whether or not they should act on it or something of that nature. So Caitlin, your best overreaction.
So this is slightly dodging your question as well. I'm sorry in advance, but it's not, I'm clearly biased in the space that I work in. So you already know what I'm going to say, but I think that there has been a lot of people underestimating the power of not necessarily just crypto, but decentralized finance as a whole, the different projects, protocols being built, and the potential that they have to completely uproot the entire financial services space. And I think a lot of people just see it more around like silly coins and NFTs of rocks that are going for hundreds of thousands of dollars, and that just doesn't make sense. But that being said, I think there's a lot of merit that is going unnoticed by the people that don't want to accept the change. So, and the younger generations have been extremely receptive as a whole, right? Like, I mean, I know a lot of people who still aren't really into it or believe it, but younger generations more receptive to the new technology and adopting it. So I would say that this is going to be a bigger, like, kind of flood into that space than anyone would anticipate right now. And I don't think it's going to be immediate, right? It's going to be kind of a slow transition. It's been going for over a decade now, but there's so many different ways in which this could flip the switch, from even the way that like money markets and anything like automated market makers, things that people don't even understand are going on in the background that they don't want to listen to. I would just say that the younger generations are paying attention. They're adopting it. They will be at the forefront of this. There's a reason that you see random 14, 16, 18-year-old kids that are making fortunes on crypto, because they're paying attention and they're taking note and they're doing something about it. Whereas a lot of the, more stubborn people stuck in their ways, usually a little bit older generations, not always, but stuck in, the systems and the businesses that they've built on those antiquated systems, and they don't want to listen. So like Julia said, pay attention to what the younger generations are paying attention to. They might not have the wealth now from a number standpoint, but they will. And I think that anyone that's refusing to pay attention there is being pretty negligent.
Okay. All right. That was kind of an overreaction. Maybe not. Actually, that wasn't an overreaction, because I think actually everything you said, I agree with. All right. I'm going to come back to you for your overreaction then too. Okay. That was a good take. All right. Michael, an overreaction?
So I've had more time to think. But I have some fun ones that I think would be pretty cool. The first one would be investor loyalty programs, like AMC. Didn't they give like free popcorn or something to the shareholders? If like a company started doing that and then their share prices start taking off immediately afterwards, that would be a lot of fun. I could see, a lot of Gen Z investors saying, I have $100. I'd like to make money on AMC plus get free movies. That would be pretty fun. The other thing is following, like, the other thing with Gen Z that I don't think we've talked about too much is like there's a big influencer community for, and that connects back to the social media and everything. And it seems like a lot of the younger generations follow influencers much closer. So, GameStop, potentially part of the run-up was because Michael Burry was invested, and he's, well known even outside from the Big Short, outside of the investment community. So it could be something like, big investors, certain influencers, the people like Elon Musk and everything that we're talking about, cryptos and some of the smaller coins, that sort of pumped those. That was pretty funny too. So that could happen too, just a bigger role that influencers play, and also a converse role where, if certain funds that aren't well liked by the investment community for one reason or another, or by young investors, file on a stock, the stock automatically tanks. That would be pretty funny. Or, if people find out they have puts or something and the stock goes up because of that. Yeah, and then the last thing, which is probably more pertinent, is I think a lot more stuff happens on social media. It's definitely been in the last few months and like the last couple of years, there are so many more younger, like super smart investors on Twitter and on all these forums that are writing, really good in-depth research and just trying to get their ideas out there and trying to get heard. And I think that continues, and that's like an awesome movement in my opinion, because investing is like the purest meritocracy. You can open a bank account with $10 and start investing, and you don't need any money to write on Twitter. So if you can find stocks that 10 bag, you'll get discovered no matter what. It doesn't matter who you are, and most of these accounts are anonymous anyway. So I think that continues, and that's probably the most interesting thing that's going to come out of this, is a bigger role and a easier role for people to get into investing and to do well because they're smart and they can find stocks to go up and not because of anything else.
100%. It's funny you mentioned influencer community. My biggest overreaction, so I didn't leave everybody hanging, and that I wouldn't answer the question myself. It wasn't so much that I think this is overreaction. I think that it's going to be even more of an explosion of financial education, fintech surrounding financial education, and within that communities. Where I wrote down this line. It's a line that it's going to sound very liney. So here it goes. Is that there's so much noise. It's time to pick a channel. So that's kind of not bad line, right? Okay, all right, okay. It was an okay line.
Good.
But anyways, like it just seems like this idea of communities is really going to take on a whole different role that I can't even, not maybe you three probably could, but at least for me, I can't even fathom like what that might look like, because it's all going to be online, and so, especially with Substacks out there, there's all these different platforms where people can subscribe and either to a newsletter or be able to contribute to, whatever that community was created by that one or group of people. So I don't know, that's my best overreaction. So yes.
You know what, Bobby, I just wanted to say something about that. So what I think is important to remember is that all of this change, I think you're right about communities, by the way. And I think it's really important to remember that this kind of change happens very slowly until it happens overnight, seemingly, right? So communities were invented actually 20 some odd years ago, and I actually worked for one of the early IT community forums, and think about how long it's taken, 20 years, for them to take off in the way that they have now. So none of this will happen overnight, but I think what happens with change is that it takes a long time. So people become sanguine to it, and they become inert to it, and they ignore it, and they think then they decide it's not going to happen anymore. And they're wrong about that, because then it's like a light switch. So paying attention to all of these things and going out of your comfort zone to try to stay relevant. I mean, obviously, Caitlin and you and Michael don't have to try as hard because you're still young, but when you're older, you kind of have to force yourself to work at staying relevant and not being stuck in your ways. And so, my last thing would just for you guys to know is that, staying relevant is really important. I think it's good for your brain anyway. So I would just be encouraging people to have an open mind and stay relevant no matter how uncomfortable it is, because there is a lot coming at us all the time.
I mean, it's so hard, right? Like, I mean, not just to do it in general, but I mean, you think about how fast everything is moving and how much noise and news and new tech. I mean, it's hard just because there's just so much, and it's exhausting. I'm 32. I'm exhausted. I mean, like I feel for those older than me that are set in their ways, because I mean, at the end of the day, it's a lot. But all right, Caitlin, I was going to come back to you as well. Have we thought of an overreaction?
Yes, and I don't know how unrealistic it is, because we've seen it in a way, but just these younger generations, like tying it all together, younger generations getting very involved. Investing is more socialized now. We see like on Twitter, Wall Street Bets, Reddit and all of that. I just foresee, I think a lot of these younger investors have realized that they want their voice to be heard. They want to be involved. They want a community, like we talked about, to kind of, I don't know, like talk about these things with. And we've seen the power of crowds affect companies negatively, right? With like the GameStop and the AMC, or negatively and positively. But I maybe just like we see that again, but on a larger scale. I don't know what that would look like, but now that the retail investor sees that they can make an impact in groups, and it doesn't necessarily have to be the biggest dollar amount for them individually, but then they find hundreds of thousands of them that'll all do the same thing. They can truly move things. So maybe we see that again. I don't know. I guess that would be my guess there.
Yeah, just to add on to that, something, I think another trend that, and this might be the explosion that you're talking about, another trend that maybe we haven't mentioned yet that Gen Z takes a particular interest in is ESG, because, the climate change is getting bigger and bigger. And, these Gen Z investors are, they were born knowing that you're supposed to recycle, you got to do, you don't waste food, all that, like, that's ingrained. Whereas some older people are more like, lax about stuff like that. So a lot of, and there are like little pockets in microcap land, at least, where, that's starting to take a hold. For example, the name's escaping me, but I probably can't mention it. It was like this mine in Canada that had a particular ESG slant, and it got picked up by some influencers on YouTube and stuff like that. And the valuation it trades at now is it's done quite well as a stock, and the valuation it trades at is probably a large premium to what at least the valuation would be if they didn't have any theme attached to them. So to say, like, ESG might be more important to companies too, and it's starting to happen. But particularly for smaller companies where the retail investors, so like these Gen Z investors, can actually impact the stock materially and, help the company raise money and do stuff like that.
I think that's a really, really good point as well. No, I agreed. That actually ties in a little bit to what Julia was talking about earlier that I promised we would come back to, and about HR, and how Gen Z is really, really focused on that as well, and wanting to, be a part of, if they don't want to start their own things, it's being a part of a company that they truly believe in. And ESG definitely is probably part of that calculation as well. I mean, Julia, to kind of close this out here, I mean, how I want you to go a little further on that point that you're talking about with HR and how Gen Z thinks about, wanting to join onto companies and be a part of companies that really stand for something.
Well, look, I mean, the social responsibility part of Gen Z is no joke, right? And I do think that some firms didn't take it seriously at first. And it's important to know that the reason why they are showing up like this is because Barack Obama is the primary president of their consciousness. And that's it. And he had a global impact. So this is not just talking about the US, but he was also a Black man. And so the image of him being diverse himself and being so articulate and so resonant with that generation, they are showing up with the same kind of important social impact point of view. They are not going to do business with companies that are skating the line of ethics. And so, and we're seeing that, right? And then we're also seeing firms that are appealing to them in an organic and natural way, like Nike, that are doing very well right now. So look, I think this is not a drill anymore, right? There are too many of them. They're 1/3 of the global population. They are poised to inherit a great deal of money, and they know things that older generations do not. And those things are native social media tendencies and technology. So look, be afraid of them in a good way, because I think they're amazing. And I am inspired by them and really think about myself being a 22-year-old going into the workplace, I was terrified of making somebody mad or saying the wrong thing or getting in trouble. And this cohort really is not. They're showing up way more empowered, and God bless them for it, because, you know, I am all about, let's make sure that we have a diverse financial services community that is listening to all cohorts in it, because it's well past due.
Agreed. Nothing else needs to be said there. I think agreed, right? So with that, you know, I think it's time. I think we're about there. So would love to get everybody's, you know, final take, you know, whatever that may be. It could be Gen Z related, it could be investing related. It could be totally not either of those things related. So, or commenting on anything that Julia just said. So Caitlin, you know, what's your final take, and also where people can go and find you to follow you on social media, as well as listen to the amazing brand new podcast that you are now hosting called The Chicks of FinTwit.
Well, you may be biased there, but the podcast is on all major streaming platforms. It's Chicks of FinTwit on Twitter. And then my personal, find me on Twitter. It's at Dead Kate Bounce, Kate CAIT. I always have thoughts on what Julia says. I just love how much she embraces younger generations, and I think we need more of that. Very clearly, very biased there, but you need to start paying attention, whether it's investing or just generally. Like the younger generations are very much easily adapting to new technologies. They're embracing them, and we should follow suit. Older generations should follow suit, right? Because you're not going to stop the train from rolling. You can either get on it or you can get ran over or missed. So you're going to be left behind either way if you don't. So I guess that would be my biggest thing. Listen to Gen Zs. We're not so bad. And you know, we're going to have a good run here. Hopefully.
Am I old enough to be considered an embracer of Gen Z, or is it like millennials? No, we're not. No, not.
You're just a millennial, Bobby. I'm really sorry to tell you. I'm just really sorry.
I feel it's unfortunate that you fell into that bucket, but you can be Gen Z adjacent.
Oh, why do us millennials? I feel like we always draw the short straw. You know, like we gotta figure this out. So Michael, what's your final take on any Gen Z investing? What happened? Microcaps.
Yeah, I mean, maybe just sticking to Gen Z. I mean, like if you're a Gen Z investor, just start investing and start posting your ideas online, and then try, you know, connecting with people, commenting on their posts, adding value to their research. 100%, like that is the way to, first of all, get better at investing, make money, which is probably the most important thing, and also, you know, make a career, do anything in the industry. Yeah, it's such a great industry because everything is interconnected. Twitter's right there, all these forums are right there. You don't need anything to invest. You don't need anything to do research besides a computer and, you know, some YouTube videos to teach you the basics. So yeah, that it's the opportunity set is just incredible for new investors to get into investing and to get their voices heard for the first time in ever, really. Yeah, to find me, I'm on Twitter. My handle's Michael2017L. My name there is Michael Liu, which is my name. And yeah, you can feel free to message me anytime, especially if you're a young investor.
And for those who don't know, Michael is one of the best microcap investors already, not just for his age, but out there.
Awesome.
So
I'm one of the microcap investors out there.
Did I say one of, you're the best Gen Z microcap. How about that?
I don't even know if that's true anymore. There's so, like I said, there's so many young investors out there now. It's crazy, and it's growing so fast. Like you have no idea. You're on microcap club, so you know. But like, yeah, it's just crazy.
Yeah, you're like an elder statesman of microcap Gen Z investors at this point.
Yeah, I mean,
Gen Z.
Yeah, there's got to be like over a dozen. Yeah, it's crazy.
It's awesome. And Julia, where can I mean, you gave a great final take, but if you want to give another final take.
I appreciate you having me. I've suspended my Twitter account for now, but you can find me on LinkedIn until I figure out my life.
Fair enough. Well, with that, Caitlin, Julia, Michael, thank you so much for joining me. This has been a lot of fun, and I look forward to catching up with each of you very shortly. Caitlin, you're forced to because we're producing a podcast together, but everybody, I do look forward to chatting with you soon.
Yeah, thank you for having me.
Thank you.
Yeah, thanks.